Over the years, I've talked extensively with Eric Muschinski about gold, precious metals, and the mining sector. He's had a very clear view that gold is going high, and it's now hit nearly all its targets and gone beyond. So I'm now asking him, really, is this now a train that has left the station, or is gold very much a thesis that is still alive and kicking? Now remember, everything we talk about is just his views and his opinions. This is not investment advice. Do your own research, do your own homework, understand why you're investing and what your risk tolerances are, and then invest accordingly. I'm here to pick your brains about the journey that gold's going on, because we started this many, many years ago when I think gold was at 1700, but the big time was around about the 2100 level when he said it's going to break, it's going to hit the high end of the 2000s, 3200 and probably 3500. And here we are today, on the 10th of September, it's 3600 and beyond. I guess the question I want to ask you is, has the gold train now left the station?
The gold train with the biggest opportunity and the conviction was when we had our series investing in the minefield. I look back to, it was almost 2 years ago, I believe, I remember we had a jump in December of 2023 in the beginning of the month where it actually bumped above 2100. And then we focused on the fact that I said, that's not going to work if it's not at least one monthly close. And I was looking for, 2200 as an absolute confirmation. And it's got to be on a monthly, because we were looking back over the course of, since 2011, like a decade plus chart where you essentially had bumped up against this number even in years prior, the last, whatever it was, 3-4 years, it kept bumping up there. And if you looked all the way back, it was literally going to be a quadruple top. And so I said, I think it's about ready to burst, but I want a monthly confirm. So sure enough, December 2023, it did not break that on a monthly, didn't do it and it was very close. I mean, this is the time I was buying a lot of stuff because I was convinced it was going to happen, and the junior miners and the mining stocks were already smashed from 3.5 years of a really tough bear market. But I believe it was March 2024. So we're looking back not that long. I mean, we're looking at about 18 months, and we walked through the whole thing. And I essentially said, the train leaves the station once that trigger happens. So when we talked in April of last year, it was game on. The train is leaving the station right now. And I had some pretty aggressive projections just because of the fact that even though gold is not something that we know to move 70% in 18 months, I wasn't necessarily looking for that. But typically when you have an asset class, or it could be a stock, it could be a commodity, when you're looking at an all-time high breakout after a quadruple top and a consolidation for over a decade, it doesn't usually just go up 5 or 10% and then the game's over. You're going to see a violent move. And that's why I said 2,700 to 3,200 was my target within 9 months of that. And I think it hit it in 7 months. Now, really quickly, where we are today, I don't have as great of a feel as far as where it's going. I'm not just going to sit here and start talking about $20,000 gold, even though there are scenarios where that happens. But what I was looking at when we consolidated for the last months, a perfect wedge flag pattern is sitting there making its move, and it could have very well turned over, and we would have a 9-month correction or something because of how big of a move that was in gold. But we just broke up. Gold is going higher. That's the next phase. So the train left the station a bit ago in supersonic speed. Right now, you can get on, call it a third of the way to your destination, and we just had a breakout. So yeah, gold's going higher. It's just a question of how high does it end up going in the next 12 to 24 months. That's a little trickier than it was when we had that breakout at 2100. And then you also have to pay attention to the other precious metals like silver, platinum, and palladium, which is frankly my favorite trade right now.
And we've seen some of the well-known investment banks are now sort of giving price targets of $4,000, $5,000. But I guess the question here is not so much short-term trading. Yes, there are risks here. Short-term trading, we've got to be careful. But is that big long-term thesis, this fiscal destruction of the global central banks that we've been seeing for the last decade or more. Is that still in play? Because that was always your big long-term thesis. It's currency devaluation, it's debt upon debt upon debt, which is the reason why you need gold as your backstop to protect against that. The long-term story, is that still very much alive?
Sure, it is. I mean, it's gold, and that's also why I've been involved in Bitcoin since 2016. Forgive me for leaning forward. I'm actually just going to check the RSI on gold because, the investment banks, you get Goldman, who, I respect their research. They're still one of the best on the street. But they make these tawdry little calls that are like, okay, now you think gold's going to go up 10%, like, hooray, hurrah, whatever, like we basically were looking at gold to go up 50+% when it broke out that last time in a very distinct period of time. So, I could easily have been totally wrong, but I wasn't. And now when we look at the theme from back in the day, it is the same in a sense, and it's also a bit more pronounced because if you think about it, gold as a barometer for the health of the monetary structure and system in the world, being the reason why I think central banks have been piling back into gold bigger than they have in many, many years. It's because of the fiat disaster that we have, the central banking, fractional reserve banking systems that we've got in America and all over the world, really. When you look at government debt everywhere in the world, corporate debt and consumer debt globally, 250 trillion. These numbers don't even make any sense anymore. It's all so relative, right? Because anyway, I think that, when you look at gold doing what it's doing, is it a reaction or is it a forecast for problems coming up? And I believe that we're in sort of the everything bubble. The Fed is about to cut rates. I think it's going to give this market and a lot of these different areas a real piece of juice for the last hurrah move, where you've got to be somebody who is very disciplined in taking profits into going forward into these markets. But yes, it's the same situation, Roger. You tell me. I mean, look at what we had in the United States. Elon comes in, it's Doge, we're going to cut costs, and he even talked about we have to or we're going to go bankrupt, okay? We have 37-ish trillion. I always lose track because it usually goes up a trillion in a few months, right? So it's like 37 trillion in debt in the United States. Our interest payments are taking up trillions of dollars a year. So at least the lower rates will help a little bit on that. But then all of a sudden you get the big beautiful bill, which is going to take our deficit even closer to 40 trillion now. The actual debt of the country, and we're going to run it at a deficit. There's no government. That's why I always say, like, if you think that one politician versus another politician is going to solve these problems, which are all about debasement and inflation, there's no possible way anymore that we can pay back our debt. The only chance would be AI ends up bringing in so much productivity and growth that we actually start to see like GDP go up 7-8%, something like that, which is possible. But even then you're going to get more emboldened politicians to even print more money. So you have to have things like gold, silver, Bitcoin in your portfolio to protect you from basically the whole world being in a box.
I think what's interesting there, you touched on it, which I think is the Chinese government now holds more gold than it does US treasuries. And we've seen this really since the Ukraine war. We've seen emerging markets, governments, or at least central banks, treasuries have been building up their stockpiles of gold because of the weaponization of the dollar, fear about dollar assets. What's interesting is that that's been this sort of big momentum trade behind it. But at the same time, we've seen gold going up. And if you look at the chart of gold versus ETF holdings, those ETF holdings have been flatlining. For individuals, for retail to actually get on the gold train, there's still a lot of juice in that. Because, I mean, you've always said that from your newsletters, you don't feel there's been that huge engagement you'd normally expect when you see gold moving as much as it has on the upside.
Yeah, we're seeing it a bit. Like I'm getting more organic subscribers and things like that, but it's nothing crazy. Um, and I think it's going to get crazy. So that'll give us a better indication when we have froth in the precious metal prices and or in the equities and the miners. But I'm looking at the weekly chart here, going back to mid 23, where we did break out from $1,800 gold to now 36.27 today. And we're not overbought. It's 71 RSI, three times in a row on this big run. It went up to about 80 on the weekly. And when I look at the monthly chart, we are overbought. It's 88 and it's been set up there. But usually on those type of charts, you can stay overbought for a good long time. So I expect at some point gold's going to have a monster shake and bake. It's going to shake the trees because of all the Johnny come lately hedge funds and pension managers and the RIAs and the family offices that finally woke up. And they're going to get tested. So you have to really realize that if this is an area that you want to have money in to protect things, you're basically going to want that pullback. That'll be your opportunity to end up really solidifying positions instead of chasing it. Silver, you need to own. Look at the fact that this has not even broken its 1980 high yet. It's crazy. And now what I think is happening, Roger, is people are shifting over to platinum. Platinum had been in a rut for a long time. It did rip earlier this year. I think it went up about 40%. It didn't pull back that much. Palladium is what I just put out as of yesterday, the ETF PALL. So you can buy the physical palladium, which is really like whatever it is, $1,100 an ounce. You could store that. You could do that with platinum. I have physical platinum. I have physical gold. I have physical silver. Physical silver is a little difficult because if you want like a million or 10 million bucks in silver, you better hire a U-Haul truck because it's very heavy stuff. But the best way for that exposure on a bigger level with liquidity, the PALL ETF, palladium ripped with platinum, but it pulled back way more. And now it's just turning back up. And palladium in the last bull cycle for these metals, these two precious metals, palladium bested platinum. I don't think that's going to happen this time. I think platinum will remain that number two under gold. But people are starting to look down after the gold trade. If they were in it, they're looking for other opportunities. If they missed it, they're saying what's still cheap and hasn't moved. So you're going to see a violent move in palladium, but it's been there before. So it would go back to those all-time highs. And silver is going to be a monster from here. I think it's, if you don't have any exposure there, you have to have it. But we're not seeing that bubbly, frothy activity. I get one of the things, the newsletter that I even keep it for, the Gold Investment Letter, goldinvestmentletter.com is my main baby since 2011, is that not only can I use my own gut feel when I'm in, bubbles or in brutal capitulations or whatever in any of these markets, I get my feel here from 30 years of experience. I look at my charts so I can tell what's lining up technically as being, relative strength and MACD and all these basic things even. And I look at them on all time frames and I can start to see when is it likely a peak or when is it likely a trough. But the third piece that I get that a lot of people don't get is I get the feedback of 60,000 people chirping from the e-letter, and then I have my premium and elite members, where I will hear about the greed side. For example, it's picked up because I've been smashing people over the head for the last 18 months to buy the mining stocks, and they're up a lot. I am not even thinking about selling any gold, silver, or precious metals or the mining stocks unless they're junior miners that get bought out or they have a way too big of a move. And that hasn't happened yet.
I mean, we've seen that there's that fantastic sort of cup and handle shape with gold, over many years. Silver has a sort of mini version. At least it's got that rounded bottom look about it. So if it does break that $50, it was 2011, and previously to that was it 1980. It breaks that level, then yes, that's potentially where we could get the surge from. I guess in the very short term, we've had this move in anticipation of the Fed cutting rates. So the Fed cuts rates. We can easily have that sort of little tradable pullback, but then that might be the opportunity, if it's across the precious metals complex, to actually go into things like silver. Take that as your opportunity for a little bit of a breather to get into these. But the key point being here is that even if they do cut rates, they're actually just doubling down on the fact they are providing more and more liquidity. They're devaluing their currency. They are doing everything that they can to keep the economy and this whole train going in that side of things through this monetary and fiscal liquidity story, which is really that long-term story why gold and precious metals should win out in the end.
Yeah, but look at what just happened over the last 18 months. Gold flipped all of that on its head. You don't need the Fed to do shit to be long precious metals, because we just saw gold going to all-time highs in the face of, rising rates initially, and basically then high interest rates. There was no cutting. It was staying there. So, we weren't getting the usual propelling of, net interest rate cuts to fuel something like a hard asset like gold and silver. So we've seen, essentially now we're close to a double in the gold price in like 20 months. And look at the environment that happened in. It really didn't need anything like we're looking for it. I think you're right in the sense that the Fed's just going to give more juice and crack to the crackheads, and that's it. It's going to fuel things. I want to be prudent and not like, I've had periods of time where I've made enormous amounts of money in like bubbles or bull markets that I was betting on, and it kind of starts to go to your head a little bit no matter what. So I just stay really conscious of saying, look, I'm gonna, when that's happening, the more humble I need to be.
And something you mentioned earlier, the gold miners. I mean, for many people, it's been like waiting for Godot, which is they've never quite taken off. But it feels like the miners now are moving. Are the gold miners now themselves in a genuine bona fide bull market of their own, having sort of languished and lagged for so long in the past?
They're in a bona fide bull market. Right now, there is a lot of opportunity in the miners. I think one of the things, Roger, that Americans and Europeans can do themselves a favor, yourselves a favor, myself a favor, is start to look at metals and mining as a real sector to invest in, because it's still very cheap compared to other asset classes. The miners have been so suppressed, and I can tell you that even through the last 2 years, so starting in August 2020, that's when gold and the gold mining stocks in particular, went into a bear market. It was brutal. We kept at least 12 to 18 companies in business because we were doing small private placements and getting these long-term warrants just to like buy time, because mining in the exploration side is one of the worst businesses in the world. All you're doing is you're raising money to drill, spend the money, and hopefully hit more of or an economic ore body that eventually is going to be a mine that somebody takes over when you're at a certain phase. There's so much value in that area. I mean, we're looking at stuff right now where, I cover some of these small ones, but there's some of them. I mean, there's one that I'm thinking of right now, like Nickel Creek Platinum. Electrum Group, which is one of the smarter institutional investors in the space, they gave them like enough to keep paying the bills, and then they cleaned up and did a rollback on the stock, and it's been going up because there are no sellers in that thing. It's all locked up. I got my position on, not as big as I wanted. I just bought more yesterday at like $2 Canadian, but these guys have a market cap, Roger, of it's like 8 million US or something, 7 million US in situ, meaning in the ground value of metals that they've already found. And we're talking about nickel, platinum, group metals, cobalt, all the different things that they have at this Shaw project. I was adding up the value. It's north of $25 billion in the ground at this asset. Don't you think that at some point things like International Tower Hill with 13.6 million ounces, that now is going to be very profitable at the grades that when it was 1,700 gold wasn't profitable? We all knew that. Now you're looking at these big projects that have been worked on, or even the smaller ones with discoveries, but they couldn't really get the funds to drill and prove these things up. Now they're going to get that capital, and there is more capital coming in. We've got to play catch up.
For people who want to get more, to follow your ideas, understand where you're thinking about investments, what should they look at? Is it the Gold Investment Letter? What are your platforms?
Yeah, goldinvestmentletter.com is my baby. That's the big one. And if you want real juice and you're a larger investor or small institution, family office, whatever, the elite membership still has like 5 spaces yet, but it's all for accredited individuals and qualified purchasers, because I am always vetting private placements where we pass the hat and then we fund these companies and there's no fee. I get us really long-term, juicy, full warrants and a good discount at the price of the market. So if you want to start building that portfolio, that's the really exciting one. And then I have eliteinvestments.com, which I focus more on institutions, and I go back and forth between any asset class, alternative investments, things of that nature, mostly listed companies if I'm talking about a swing trade or something. So that's another one that's valid. The only problem is that, like with the e-letter and Gold Investment Letter and Elite Investments, you're probably not going to get enough content because I do it when I want, and that's it. And so you'll get good stuff when the alerts come out, but sometimes there are gaps. However, in the paid services, it's like right now, especially, we're getting stuff all the time. It's either videos or updates on our portfolio or what to buy, what to do. So it's really actually a very exciting time.
As we heard from Eric there, this story for gold, precious metals and miners is very much still in play, despite this quite extraordinary move that we've had in gold and now a bit of a catch-up trade in silver. Yes, things have gone a long way. You may say they've gone too far too fast, probably due a bit of a pullback. But is that big story behind gold and precious metals still alive and kicking? Well, yes, it is. Central banks the world over are still devaluing their currencies. We're still seeing this fiscal, we're still seeing this monetary. And that should be the story behind gold and precious metals as that safety mechanism in portfolios for the foreseeable future.